Kevin, this is for Thursday, March. Gosh darn it, was it the 28th? Yeah, I'm quite sure. It is March 28th. Anyway, it's Thursday. So, I think what I'm just going to do here is go through the newsletters first, and if there's anything to show on the charts, we can do that. So, we'll start with the lean hogs, and you and I had already talked about this. Let me move this over here. How this market actually dropped to within, a half point or so of this 92.20 long-term support, and then we bounced nicely later in the day. Um, we still closed down on the day though, so market's still susceptible to testing this 92.20 once again within the week. Um, but holding above 92.20, all systems go to the upside, and as we've been saying, closing below 92.20, then the 87.42 is expected. And this 88.25, by the way, if you recall today, that's that ascending one-third speed line off that low. So that's our buy pullbacks range on the daily chart. On the weekly chart, it's 92.20. I should almost beef this up to multi-week containment, to be quite honest, because it is a bit trend defining as far as the June contract goes. But we're not there yet. If we close below 92.20 today, we will talk all about this for the coming days. Until then, 92.20 support, bullish above. And take a look at that spread. This one got away from us, but that happens. Obviously, you think about how could we have done things different, so forth and so on. But I know, and I don't really want to violate our 1% loss. I mean, it may happen from time to time, but we're really looking at $380 to $400 per trade that we risk. And I really don't want to go beyond that because I think that's just good risk management. And so if we take a series of 3 or 5 razor cuts like that, and they add up to 5%, but we get into a nice trade that gives us 7 or 10% over the course of a number of weeks. So that's actually kind of the way it happens. I think that's the way futures trading is. You make 90% of your profits and 10% of your trades. So, but should we look to continue going short? I think if we get up in this area, sure. Uh, do we sell it in here? Um, let's see, a 1 point loss if we sold it, say at 3 even, would be up to that's 4 even. That's $400. I could be told, I could be, I could be convinced to sell it anywhere between this, which is this 3.10. Let me take a look at this. I already have it on there, don't I? Yeah. Okay. I'm sorry. 3.050. I thought I was looking at CQG there for a second. Is the double bottom here from Tuesday, Wednesday. And this is 3.15, which is this double bottom from a couple of weeks ago. So any of these points are, rational short entry areas because we are below 335 even. And as long as that's the case, looking for 177. So if you're antsy to get on the short side of this, I'm all ears. Um, let's go on to feeder cattle. Feeder cattle actually came back down after we talked. Um, we settled negative on the day. We're still in spitting distance of this level uh, tomorrow or Friday. And as you're well aware, not only is it a 50% retracement, but more importantly, this long-term speed line. So above it, this market remains bullish. There's just really no two ways for me to look at it. And how do we want to get long? We talked about kind of a big call spread. We could certainly look at that if you like. And then closing the week below it, it looks weak through April and into later spring. Actually, there is I think if we close below it, we're going to see this trend line real quickly. Let me go ahead and take a look at feeder cattle, the weekly chart here. There's that. Oh, look at this. When do these numbers come out? There they are again. When did these numbers come out? It came out today, didn't it? This, look at that arrow, stupid arrows in the way. Let me move that out of the way. So that's constructive. Key reversal low. We gapped above it. That's constructive, right? Is this just, this isn't follow through on what happened in the futures, is it? We can talk about this tomorrow if you like. I mean, this is, if we're using this as a basis, if we close above this channel top at 141.36, then, you know, we're looking for another 5 handles higher. So there's that. But what I was just going to do was, you know, if we violate this speed line to the downside, we've got, well, look at that. This may be stronger support than I had envisioned. This is that 138.60 area, 138.80, yeah, 138, upper 138 handle. But what I was really looking at, if we close back below this speed line, would be the possibility of, you know, this, you know, but the truth is this is stair step. So violating this, we're looking out for one upper 138 handle as a target, and that, if that gets violated, then we're looking for the 126 handle, and this is like a 126.75, I believe, this week. So I shouldn't be so bold here, I guess, to assume that if we violate the speed line that we are vulnerable to testing 126 over the coming months. I don't think that's necessarily true. I do think this is a respectable area that could, where we could bottom out, you know, through summer trade. So anyway, kind of an amending of that idea. Um, the cattle markets, they're all, June and August are all approaching this area. We should probably talk about our stick our neck out buy area. We have the 1/3 speed line. It may be worth waiting for the channel bottom at 117.35. I kind of prefer that. That's not to say that we couldn't bottom out at the speed line, of course, over the course of a number of weeks, but you know, I think the sell-off deserves, you know, if we're not in it on the short side, I think picking a bottom a little early might be premature. I think 117.35 is our level. That's my opinion for June. And then for August, it's 114.35. So you've got this old high here at 115.30, which is roughly consistent with this 115.72 speed line. So, you know, we're likely to get a bounce off of these speed lines. The question is whether the market, I could see the consolidating and then violating and ultimately hitting the channel bottom. So there's that. I guess my vote would be wait for the channel bottom before we buy these cattle markets as they continue to fall. Um, Ethanol, RBOB backed off nicely, similar to oh, here we are. I'm just going to show you the damn newsletter. We tested this channel top, which this week has been almost, you know, on top of this other formation. We actually kind of tested this formation. It doesn't show on this chart because that's a copy from last Sunday. But this area has been tested, and now we are vulnerable to bearish rotation. This is kind of the scenario I've been waiting for in crude, but unleaded gas beat crude to the punch. And so that's happening as we speak. So being short this market has been the play, and expecting this 76.38 formation over the next week or two. But ultimately, you know, following this test, this market could. Now, there was a 5/8 retracement from this low to this high at around 144 and change, and that's also consistent with this consolidation area. So that's kind of the big picture possibility following the test of this channel top. But 76.38 is respectable in terms of its ability. If I were short here, I would pull the short here at 76.38. I don't know if I'd go long, but I would then wait for the settlement below this channel formation to go short again. And that's the way I would play crude too. Get out of this feeder cattle. Take a look at crude. Come on. You know, were we to test this channel formation, and we haven't yet, then the market would back off, and this would be the channel structure I'd be watching to the downside for secondary confirmation. But, you know, we've talked about crude, 61.67 to 62.15, the big area. We're not going to get there tomorrow, I don't think. Otherwise, um, if you want to sell this market, it would be a settlement below 56.17. And we can take a quick look at May corn. And there you have that. It looks like we're going to retest this 365 area, mid 360s, which is down here. Obviously, this chart still looks bearish. This looks like a lot of the grains right now. You know, overhead resistance significant, and the market subject to failure, and we're seeing that right now again. So 65 and 3/4 is the support that, if settled below, should yield that 346.5 long-term support here. Now, I guess I'll just put this out there. There's sometimes it's hard to explain, but I incorporate word into the construction of my. I use some of these tools. It's a long story. It has to do with how I like the charts to look. Anyway, so this 346.5 is a long-term structure that's been holding beautifully since the 16 lows. We've tested it several times to the very tick. And if we close below it on a weekly basis in the coming weeks, there's a put play. There's a, you know, buying out of the money puts that could last through summer. I would expect actually 220 or so as a target. So we can talk about that if we happen to approach that area. But right now, there's not a whole lot going on to do. You know, I'd sell 384.5 all day long. I have to think about whether I really want to buy 65 and 3/4 again on the way down. And by again, I mean as a level that I would recommend buying into later April. I guess I did move something around there. Corn. Soybean meal. It sold off heavy today. And I'm looking now for this 297.6 formation, holding below 310 even. That was the sell signal today. We actually opened below it. And so this is likely over by the end of the next week. Overall, this market remains heavy below 325.2. This chart is not updated from last week. And in fact, we could get down to 286.9 in the coming weeks. Possibly this 260.3 as we continue into the depths of summer, depending on what's happening in the market at that time. Take a look at soybeans. Soybeans sold off as well, as you would expect, with bean meal down. Likely it says 878 and 3/4 possibly today. We can bottom out here for the week actually quite easily. But as I've been saying, holding below this structure here, this is a weekly chart of May, 857 even, 857 and a quarter is in play by the end of April. And if we close today below 78 and 3/4, then we should by the end of next week test 57 and a quarter. And this is an area I wouldn't object to buying into, whether it be calls or whatever the case might be. So, but at this point in time, not a whole lot to do in beans unless, you know, we are 1 to 2 week trades. You know, this 78 and 3/4 is a viable area, but I think we're looking for big picture stuff, which has me I just remembered about the bond trade, so I'll get to that in a moment. Let me finish wheat. We're out of this now. These sirens here, there's so many people that get hurt 2 or 3 times a day on the hills. It's crazy. I don't know if you heard that in the background, but anyway, so we closed mostly unchanged, up a quarter point. This 82 and 3/4 still there. Just for future reference, I know we're out of this now, but this 502 half all the way up to 512 and 3/4 is a great area to buy puts if the market gives us that chance. Uh, otherwise, right now, 452 and 3/4 could conceivably be beefed up to a weekly containment level now, and I can show you that. If it'll stay. I think I just learned a new trick for. Okay, this is it. This is that 552 and 3/4 rising. That's a pretty good weekly containment level. The market could back off and then head back up into the low $5 from here. But if we close below 452 and 3/4, then 431 even is expected again, which, as you're well aware, is this long-term channel structure here that we bought a couple weeks ago. Is it only 2 weeks ago? Seems like a month ago. Maybe it was 3 weeks ago. I don't know. Anyway, so there's that. And maybe I'll just finish this out with the S&P. Once again, the S&P topped out at this structure for the day, 28, 29.5. I believe the high was 31 and 3/4. The day version of that chart on the daily chart was around 28, 31.5. Today, Thursday, it's right here, 29.5 to 30 even. So if we close the week below it, it's still as susceptible to bearish rotation into later April. But we really do need to violate 27.67 even first on the way down, because until then, we could do 1 or 2 weeks of just sort of consolidation in between these 2 points. Maybe not 2 weeks, but the better part of a week. Closing below 67 even does indicate the 27.40. I don't have that illustrated here. 26.47 halfway down the 26 handle within a week or two, where we can actually bottom out into later second quarter. If we violate, by the way, 26.47 half, the market looks quite ugly again. I mean, I think a retest of this low would be likely, but we're not there yet. And if we close the week above 28.30 even, as I've been saying, 28.29 half looks good, which is the same. While I'm talking about it, we'll just go back to the NASDAQ. I know we covered this today, but it's this formation here. And that next week is at 34 half, 75, 34 half. Let's take a look at the bonds while I'm down here. Okay, why did that bar vanish? I do not know. This is fictitious. I don't know why that happened. There must be, we must be minutes to open, because the last I saw, hold on a second here, let me pull up a 30-minute bar. Yeah, there we go. All right. So yeah, we're in the low 150 handle here, which is nice. So I'm just going to keep the 30-minute bar up. This is the high a couple days ago. We settled above it. That's nice. So this. I don't know when we bought it. I think we were in here somewhere. The call, and so it looks good. Settling now. This bar was yesterday. Today, 28th, Thursday, 149.05. And on the weekly chart, it's 149.07. So as long as we close Friday above 149.07, this is a keeper. I did some forecasting here. I do think that if the market gives this trade to us, if we reach this channel top in the next few weeks in the 154 handle, I think that would be a good place to unload it. I don't know about going short, but I do see the possibility of the market testing this and then maybe consolidating, backing off for a certain amount of time. And then if we happen to, and I can convert this to a daily chart. So, if I did that, here we go with the June. I don't want the June, so we're going to go to the chart setup. No continuation. Apply. So, there's the daily charts. At 153.24 now. It'll be in the 154 handle by mid-April. Actually, low 155 handle by mid-April. So if the market gives us this, I'd say we unload the call there. And I know this is kind of a long-term big picture thing, but my thinking is We get up here, we back off maybe for a week or two or three, and then the market comes right back at it again. And so we sell it at the channel top, and then the very same day the market closes above the channel top. We just get right back in, and we give up whatever we gave up in order to get back in, because that would mean acceleration. And then reaching this would just be a matter of weeks away, in my opinion. So I know I'm forecasting here way ahead of it, but we still need to settle the week above 149.07. If we don't, or if we settle the day below 149.05, then we just bail, take our lumps. I'm guessing the 10-year took off today as well. Yeah, it continued higher. That's a weekly chart. Here's the daily chart. Interesting, isn't that? It didn't actually take out Wednesday's high. I'm sorry, Tuesday's high. Inside day yesterday, but it settled positive. Interesting. All right. Take a look at, we'll jump in the Canadian dollar. Settled negative on the day, obviously. Let me reconstruct this. There's our channel top, 75.34. That's our primary level, below which the market should continue south over the next week, 2 or 3, into the 73 handle. That's no longer 73.68, it's 73.59. So there's a Canadian. Bullish above this, bearish below. I can take a quick look at the euro currency if you like, see if anything crazy happened. No, it just continued south after hitting this 115 area. Nothing to do here, though, in the middle of this. I do need to reconstruct my currency. Sorry about that. I forgot about this. Because I've got day session only. I'm going to jump to gold. Come on. All right. So we've got this primary channel formation tomorrow at 1306.5. And, I want to see that settle below. I want to see this violation in the coming days. I don't know if we'll act on it when it does, but it would help. It would sort of affirm our long bond trade right now, because our long bond trade is essentially deflationary, or it lacks inflation. Let's put it that way. I don't know about deflationary. And so gold thrives on inflation. We've got a bit of a channel bottom here. I just threw it up for shits and giggles, but we've had a couple. This market keeps wanting to rally, and it doesn't. This high settlement should have been it. Perhaps, I don't know. This channel top would be it, but you can follow this thing all the way up, and eventually, even though you settle above it, I don't know if you're crazy about buying it on strength. We only have a few weeks before we get in the 1380s. So pivot point, big one, through April, 1306.5 tomorrow. See what silver is doing. Easing off, but nothing really spectacular. Copper, what's it doing? It's still in this zone. If we close back above this little channel bottom, that's a neutralization of this, what I'm calling a sell signal based on a failed buy signal. So just we'll watch this, how this settles for the week itself, to see what at least our opinion might be of copper. Platinum, nothing really going here. I mean, in other words, it doesn't really look all that different. I'll take a look at cotton. Didn't I have cotton in here? Yes, weekly cotton. Yeah, I like this area up here, as we talked about, upper 79, low 80 area. This is a good short play, and inversely, if we settle above it, it's a good long play. So we'll keep our eye on that cotton. Nothing really to do with coffee. It doesn't really interest me. Sugar, anything? Nope, sugar's there. Same old, same old. A buy signal above 1320. Until then, nothing going really. And then finally, Coco, same exact picture as this morning. So there's 25 minutes. We're in a we're in a bond call that looks good, and hopefully we settle Friday above 149.07. And if so, then that's a good. I like being in that trade. If you want to finagle into, with regard to the spread, you know, the cattle spread, I like the idea of trading the cattle spread for a number of reasons, but primarily because I know you're adept at trading them. You're familiar with them. Um, and so, I think any trade we get into, we need to be willing to risk 1%. I mean, we don't want to. And if we see reasons to get out at a quarter or a half of 1%, in other words, anywhere from $1 to $200 loss, that's great. We've done that before. Um, but, this is a nice 3 to 5 week, perhaps 2 to 3 week. Um, and if it means that we scale into it, we get into one, like today, hindsight 2020, we could have been more aggressive. I'm not at all fretting that we weren't. But let's say, we just sort of jump in there, kind of like we did with the bond call today. We just sort of jump in, and then as the day wears on, we get confirmation, and maybe we go short another one into the close. And I don't know what our maximum exposure should be, because now we're $400 for a half a point move instead of a full point, and so forth and so on. But anyway, just wanted to put that out there. And I guess that's about it. We will talk tomorrow.